RBC has just dropped a shocking report about the housing market, which is so confusing, which we're going to get into now, because on the one hand, they're like, oh, the housing market showing signs of recovery. And then on the other hand, they're like, housing market is going to be shit. So it's really an interesting report, to be honest. So first of all, Canada's housing market has faced significant challenges this year. A trade war disrupted what had been an early recovery in demand for existing homes, driving transactions to cyclical lows this spring and pushing down property values, particularly in Ontario and BC. Our January outlook anticipated that interest rate cuts would spur activity and would push prices slightly higher in 2025. However, market conditions have been weaker than expected. So that's the first thing we have to think about. They've been wrong so far in 2025. So are they going to be right now? I don't know. I mean, you can be the judge of this. Gradual, albeit partial, home resale recovery in store. So this is what they're forecasting here, is that home resales are going to go slightly higher here. Encouragingly, recent signs of an ongoing recovery have emerged. Prospective buyers are re-entering the market as economic fears ease and lower interest rates gain traction. Not so sure about that, because I'm thinking it's more to do with the fact prices are coming down. So that is influencing more buyers coming into the market, because you're especially seeing that in areas like Toronto, which are experiencing a lot of price reductions now. And you're seeing home resales that are starting to go up because people will buy if the prices come down. But obviously a lot of people are limited in what they can do because they can't afford to take a loss, and they're just trying to sell for a price that they're never going to get, essentially. And that's part of the problem, because until you see the fact that they're forced into that market and the fear really hits, nothing happens when it comes to their pricing, because they can't do anything. They can't afford to take a huge loss. Firming demand in 2026 amid persistent challenges. We project a 7.9% rebound in home resales next year, reaching 504,100 units, but still below the pre-pandemic 5-year average of 511,000 units. Several constraints will temper the recovery. A fragile labor market, reduced immigration targets, and affordability challenges will limit the pace of growth. For pricing, supply and demand conditions have shifted in buyers' favor, particularly in Ontario and BC, where affordability issues are acute. So that really sees that you're going to see home prices go down slightly, and that's basically what they're seeing here. You can see that it goes down slightly, then starts to recover. I mean, it's all just a forecast at this point, but you can see this as well with resale slumping below trend since the Bank of Canada hiked rates. And basically you've got the trend, which is this yellow line here, and then you've got the actual amount of resales that have happened. And obviously you've got to realize that the Bank of Canada has been cutting rates for like a year now, and you haven't seen any sort of recovery in home resales, yet they still have this narrative that, you know, interest rate cuts, guys, interest rate cuts, when they start coming, it's just going to boom again. Like, you're just going to see suddenly thousands of people rushing into the market. I mean, for a start off, the Bank of Canada doesn't control rates like the 5-year bond, and they don't control what mortgage rates are set at either, and the risk premiums that are calculated, and whether people can even get a loan because of the perceived risk from the banks. But obviously it's pretty interesting to analyze what these big banks are thinking. And you've got the Bank of Canada that has been holding rates now at this level. Bond yields have obviously been marching higher as well, and you're also seeing that basically investor confidence for investing in Canada is absolutely tanking here. It's at the lowest level since 2017 as far as this index that Table Salt posted on X goes back. So you're just seeing less and less confidence for people investing in Canada. You're seeing power of sales that are continually happening here. So this is a 45% drop in price, and it's obviously in cottage country, which has been affected by what's happening in the housing market, because nobody wants to buy a second home, and that resale market is absolutely tanked. And now you're basically seeing people get their ass handed to them in places like cottage country. This was bought for 2022 for a massive 1.9 million. The owners have been trying to exit for more than a year, dropping the price 6 times before the lenders took over. They finally capitulated to an $850,000 loss, and that's the lender. Do you really think the buyers are going to be able to actually swallow a loss that large? I mean, yeah, the lender can go after them in court, but are they going to recoup that amount of money? Unlikely. So basically, you're going to see the losses more and more shift onto the bank's balance sheet. And that obviously has a huge bias. I mean, RBC is the biggest lender in Canada, more than $1 trillion worth of loans. So you have to bear in mind that they have a huge bias here. And you can see that they're saying basically pent-up demand is going to play into it. And where have we heard this narrative before? We've heard this narrative time and time again, and really that's not how a market works. It's just not. And if you look at what's going on with consumer confidence right now, they say that confidence is going to improve, but when you actually look at what's going on here, you know, confidence is still below 50, so it's negative. And if you look at where it is compared to like 2017, for example, you know, it's nowhere near that level. And even if you look at the CFIB business barometer, which has improved slightly, still you're talking about levels during the pandemic, you're talking about levels during the financial crisis, and we're led to believe that this is some sort of recovery? I mean, are these people absolutely insane? I don't know. But this report from RBC kind of contradicts itself, because it's like the market's going to recover, but it's not going to recover. But anyway, let's see what else they're saying. So brighter economic prospects to lift confidence. And we've just been through that. Does it look like confidence is all of a sudden going to improve? I mean, it just doesn't look like that. There's nothing to suggest that the labor market in Canada is improving. There's nothing to suggest that GDP is suddenly going to start growing at a decent rate either. There's just nothing to suggest that at all. So basically, you have to remember that in order for this recovery, which isn't really a recovery as even they're saying, to happen, you need to see a recovery in the labor market. You need to see an economy that is growing. And the economy is only going to be growing because of higher government spending, which is not a good thing and is not productive either.
It'll be painful.
Interest rate cuts supporting resale growth. The Bank of Canada rate cuts since June 2024 have yet to fully play out. Last fall's market recovery was interrupted by the trade war, but we expect it will resume as lower borrowing costs trickle through to the economy. I mean, we've been through this before. You can just look at a chart of unemployment. Unemployment has been going up, and you can see here that interest rates, yes, they've come down here, but the 5-year bond yield is actually going up. So if Canadians want some sort of stability, kind of stability for 5 years at least, when they're buying a home, they're looking at higher rates than they were looking at a year ago. So, I mean, it's not cheaper. It's only the overnight rate that has gone down. And as I've said time and time again, it's because the Bank of Canada, they don't really control the rates and control what's going on here. And then affordability issues will persist despite easing. And you can basically see going higher on this chart means it's less affordable to own a home. So obviously, until we're getting down to at least 2019, 2018 levels, you're not going to see the average home buyer entering into the market. So in order to see a recovery in the housing market, that means you need to see more investors. And how are you going to see that when even they talk about how the fact immigration and the population growth is going to grind to a complete halt? So, I mean, I just have little faith in some of these reports, because really what they're showing is, yeah, it's going to recover. They have a huge bias. They obviously want to think that that's going to happen. But in reality, when you dig into some of the other pieces of data, like the sentiment that even they talk about, it's actually negative. It's actually at lows. And that doesn't mean that the economy is going to suddenly start booming. If sentiment is bad, if the economy isn't growing, if more people are losing their jobs, I mean, where's the recovery coming from? The investors aren't coming back. The rental market is absolutely tanking in Canada and is not in a good place. So it remains to be seen what's going to happen, but I have little faith in this report. And I think it's a good thing to go over these reports, which are obviously saying, oh, it's going to recover, and check out what are the reasons they're giving for that and why do they think it's going to recover. Are any of those reasons actually credible? Because if it's just, oh, interest rates are going to come down and that's going to spur on economic activity, and then you're basically going to see more confidence, people are just going to go back into the housing market with lower rates, then that is just complete bullshit. And you only have to go back through time to realize that, or even look at what's happened over the past year. They've been cutting rates for a year now, and that hasn't happened. And yeah, they're going to go blame it on whatever narrative they can, the trade war or the fires or whatever it is. But that doesn't change the fact that you've had interest rates declining and you have had people entering that market going down also, along with prices. So anyway, we'll have to see what happens here, but the losses, they continue to stack up here. So anyway, if you've enjoyed this video, I'd highly recommend you check out this video here. And then if you're looking for a VPN and also want to help support the channel, please go to ExpressVPN, link in the description below, and I will see you in the next one. Take care, guys. Bye-bye.